New to the channel? What's up? My name is Cleveland and I worked as a professional trader and analyst for 6 years. And now I'm here to bring you my daily insights on business, capital markets, finance, and more. Enjoy the video and welcome to the channel.
All right, guys, what's up? Welcome back to the channel. If you're new here, by the way, my name is Cleveland. I've been in capital markets for far too long, right? I've traded in stocks, I've traded in FX, but specifically with stocks, I've worked at institutions that managed millions of dollars and I was intertwined in their daily operations, right? Same with FX. So I know the discernible differences between the two asset classes, right? So this is going to give you a really good understanding on the two, because let's talk about what trading is in general, right? Trading, in so many words, is buying an undervalued asset or selling an overvalued asset for a profit. And you can do that in stocks and you can do that in Forex. But there are things you can do in stocks that you can't do in Forex. And conversely, there are things you can do in Forex that you can't do in stocks. For example, investing in stocks. You can't invest in a currency pair, right? You can hold a currency pair and do a long-term swing position, but you can't necessarily invest in a currency pair. And that's mainly because, well, currency pairs aren't supposed to be investable assets. And conversely, there are things you can do in Forex that you can't do in stocks. And if you implement Forex trading strategies in a stock market, you might see yourself struggling to profitability because the asset classes are different. Are there some strategies that are applicable to both? Sure. But by and large, there are differences. So first things first, investing, right? We know in the stock market, you can invest, and that's because you're actually buying a real asset. When you buy a stock, you're owning a piece of the company. Well, when you buy a currency, specifically a currency pair, well, you're not owning anything. It's a derivative. It's in the futures market, right? And those aren't real tangible assets. They're just contracts, right? And not only that, the exponential growth that you can see in a stock, you can't really see that same type of growth in terms of a buy and hold strategy in a currency. Now, can you take a long-term currency trade? 100%. But at the end of the day, the methodologies are two completely different things in terms of the underlying, right? Yes, there can be an economic catalyst that drives a currency for potentially years in one single direction. There's a great example of this actually here on the Euro USD. Here we can see on the Euro USD back in 2014, this is one of my favorite examples, for years, April 2014 all the way to April 2015, we saw a massive long-term trend where the US dollar was getting stronger and the euro was getting weaker. And that's something that you can hold, you could have held for over a year, but by and large, you don't see trends that last for years and years and years, as opposed to Facebook. If you would have been holding Facebook for the past, let's say 10 years, well then yeah, you would have been able to profit continuously over this entire time. And you really have never seen a 10-year trend in a currency. So there goes it, right? You can't invest in a currency. So most of the strategies that you'll be implementing in currency trading are going to be day trading strategies and maybe swing trading strategies and maybe long-term swing trading strategies. And this is why Forex trading is so appeasing to retail traders, because just based off of the infrastructure of how the market works, you're not supposed to be investing in anything. You're supposed to be in and out. And retail traders love the idea of getting in something and getting out of something and having profits. All right. So that's one of the major discernible differences when it comes to FX versus stocks. Now, another one, though, is exposure, right? Because think about it. If I buy Facebook stock, well, I'm only exposed to Facebook. Is Facebook in a particular sector? Sure, it's in tech stocks, right? And usually when you see tech stocks decline, right, you're going to get the basket declining. As opposed to currencies, there's a Euro USD. You can't really buy a currency independently on its own, right? Even with the dollar index, people say, oh, well, you can buy the dollar index and trade that in the futures market. Well, the dollar index is relative to other currencies. It's not just the dollar, right? So when you have double exposure in currencies, you're dealing with a lot of things there, because what happens when the euro is trading to the upside, right? There's buy side pressure on the euro, and there's also buy side pressure on the dollar, where what you're going to have happen in that instance is consolidation, right? But on the contrary, let's say you're getting buy side pressure on the euro and sell side pressure on the US dollar, you're going to have what we like to call parabolic moves or economic divergence. Two economies splitting apart, going in opposite directions. This is very, very powerful, because now you're going to get an exacerbated price move. And that's something you can't find in stock trading, right? You can find growth stocks, or you can go to penny stocks and just start dabbling there. But by and large, in Forex, you can go to a well-regulated market, right? Not centralized. We're going to talk about that in a second. But in general, it's well-regulated. You can go to the biggest assets in that market, euro, the yen, the US dollar, And you can experience moments in those assets where one currency is going in one direction and another currency is going in another direction, and that can give you an absolutely parabolic move. It's hard to find that in stocks unless you're playing in the options, right? And when you're playing in the options and you're playing weeklies, you're just dealing with a whole nother case of variables. And we're going to talk about trading options on this channel very, very soon. So make sure you guys subscribe if that's something that you've always wanted to hear about, or if you don't have a lot of knowledge about there as well, right? So I like the idea in Forex that you have that you're doubly exposed, where anytime we buy a currency pair, we're technically buying two assets, because I do factor that in to the strategy. And that's not something you can just take from Forex and put into the stock basket, right? I mean, you can't play economic divergence when it comes to stocks. So this is a really fantastic situation where a new trader can see discernibly, whoa, there's a Forex trading strategy that is really specific to FX that doesn't apply everywhere else. Because unfortunately, the narrative in retail trading is that one strategy can be used in every asset class. And that's just not the case. And usually that's perpetuated by people who are only looking at technical analysis, and they're building some type of methodology off of reading charts and candlestick patterns and chart patterns and things of that sort. But at the end of the day, the market is two completely different asset classes. You can't just pick up a Forex strategy and throw it into stocks, literally because Forex has double exposure, and you have to account anytime you take a currency trade. You need to be accounting for both currencies. We talk about this inside of Top Trader University, where we trade economic divergence. That's our core strategy, because when you experience economic divergence, you get massively parabolic price moves. We just saw economic divergence on the Euro NZD actually, and you guys will notice massive selling here on the Euro NZD from 173 all the way down to 159, over 2,000 pips. Well, what was happening? Was the Euro getting weaker and the NZD getting stronger? Yes, that's exactly what was happening here, right? So we can look, this is our Euro, right? And then we can see this is our NZD, right? NZD's falling now, but in that moment, you saw the NZD pounding to the upside and the Euro getting weaker. Boom, you have economic divergence. And that's why you can have a 2,000 pip price move in the span of February and by March, right? So less than a month, you had 2,000 pips sell side. And that's a move we were able to capitalize on because we understood that was happening in the market in that moment, right? So there's another variable that's very different between stocks and Forex, and that's level 2. Right, so level 2 is the ability to see times and sales data, right? So Forex is a decentralized market. There's no central exchange where all currency trades are routed, right? You can buy and sell currency at Citibank. You can buy and sell currency at Deutsche Bank. You can buy and sell currency at Goldman Sachs. Any institution you can buy and sell. Right. And so for them, yes, they see the sales data coming in. But by and large, the retail guy, we don't have access to that. As opposed to stocks, it's all going through one central exchange, the New York Stock Exchange. So any lift stock that is traded on a Tuesday is all going to be going through the New York City Stock Exchange, and we're going to be able to see all the price and sales data, right? And what that does for you is give you more trading strategies, because there are many traders who trade specifically the tape. It's called reading the tape, basically, because you get just this flow of sales data that comes in on a wide variety of different platforms. They offer this, right? And you don't get that on a Forex. So you really have no real idea about the liquidity of the FX market at any given time. Now, there are some people that say, no, Cleveland, you can read the volume. There's an indicator that you can throw up on your screen and you can see the volume coming in. No, that's not what that is, not even close. And then some people will say you can look at the commitment of traders report, and that report shows you what traders are doing. No, that is also not the case either. But there is an outlet where you can see the volume coming in when it comes to Forex. Either you have a Bloomberg terminal that's costing you $2,400 a month or $24,000 a year, or you go to the Bank of International Settlement, right? The Bank of International Settlement basically is a repository of all the FX trades over the past 3 years. It's a report that comes out every 3 years called the Triennial Survey, and I have it pulled up right here. And what's awesome is you can literally see the amount of volume and the amount of different Forex instruments that were traded and what market participants were mostly involved, right? I'm not going to go through everything, and I'll put it in the link in the description so you guys can have access to this as well. So you guys can see right here, for example, that FX spot was just a fraction of the overall Forex volume, right? So when traders say, oh, the Forex market is a $5 trillion market, well, technically right here, you can tell them that, hey, no, well, it is a $6.5 trillion market, but we're only trading in $1.9 trillion of that general market because the FX spot market is what we have access to as retail traders. We're not trading swaps, we're not trading options, and we're not trading forwards, right? Only large institutions are trading those type of financial instruments. We're trading the spot market. So the only real market we're trading is, again, the spot market. And what's even more interesting is that when you ask yourself, well, how much of that spot market is retail trading volume? 2%, and it shows that here as well. So 98% of even the spot market is done by banks and commercial organizations. Okay, so by and large, these are major differences, right? And depending on your appetite for risk, and depending on your schedule as a just general person living maybe a 9 to 5 or something along those lines, you might be more swayed to trade FX because it's a 24-hour market and things of that sort, right? But when it comes to the ability to make returns, there's a reason I like Forex. And the reason why I stick with Forex is because, one, economic divergence just gives you such an amazing opportunity to capitalize on a market event that is just fairly rare, and you can really sit back and wait for those moments if you understand market fundamentals. And again, that's what we pride ourselves on, is understanding market fundamentals and understanding why the actual market is moving. The euro's falling because of the Ukrainian war. The NZD is piling to the upside because of palladium prices, right? If you're able to conceptualize those things, you can make really sound judgments and decisions on what trades to take. And that's what I want you guys to do. Regardless if you're trading stocks or regardless if you're trading Forex, the best thing that you guys can do is make sound decisions on each trade that you're taking and not just blindly take it because of a moving average crossover. There's no real logic behind why that's the case, besides some conspiracy theory of, oh, traders are now getting in because it happened and they're all looking at it. No, that's not enough for me. I need a little bit more factual data before I make a trading decision, because that's just personally how I live my life. All right. So by and large, if you're somebody with a longer time horizon who likes to maybe sit and hold a bit, stock trading 100% is for you, right? And if you're not, you can still trade stocks, but understand that stocks, you're going to really get no more than 2 to 1 leverage at any real regulated broker. So you're going to need more capital if you're trading in the stock market. Now, some people then go and say, well, what about options? Sure. Options give you the ability to make more returns on any given stock, but there's just a lot more variables that come with that. And options trading is one of the most dynamic and one of the most challenging asset classes in the world. So I don't suggest any new trader just go hop right into options. Forex, on the other hand, you get a very focused asset class with just a few currency pairs that everyone is looking at that are all driven really well by fundamental data. So you don't really get random spikes out of nowhere, real long random trends, or have no real idea why the market's moving. You really will almost always know why the market's moving in FX. And that's amazing because you can build fundamental strategies on top of that. That's one. Two, it's a lot of leverage. And with all that leverage, it does give you a tremendous amount of upside potential. And most retail traders are starting out with less than $10,000 in their trading account. So it gives them an amazing opportunity to compound that capital and scale. All right. So these are some of the major differences between stock trading and Forex trading. And by and large, if you're somebody with a larger appetite for risk, you have a little less capital, but you still want to learn like the core concept of how the market functions from a fundamental standpoint, I suggest you trade FX. But if you're somebody who's always been swayed and always been interested in the stock market and understanding companies and how they all are interconnected because of sectors and just buying behavior by citizens and things of that sort, then sure, I would suggest that you trade stocks. And of course, there's pattern trading in stocks as well that you can capitalize on, but usually you have to have $25,000. You guys may have already experienced this if you trade in Robinhood, Webull, Public, or whatever. All right, so let me know what you guys think in this regard. Comment down below which asset class that you trade. Do you trade both? Totally okay if you do, but if you're new, I would suggest sticking to one and understanding it to its core. So again, if you guys need help trading fundamentals and you really want to understand how to capitalize in FX markets, go through the Fundamental University. The link for that is down in the bio. Check out the BIS survey as well if you want to see a little bit more about Forex market participation. A lot of people don't know about this website, so I'm happy to pass it over. I'll talk to you guys soon. All right, peace out.